Welcome to Alongside Us, a Haverkamp view on the market. I'm Jessica Mortweet, Chief Marketing Officer here at Haverkamp Group and your host for today. We created the show as a way to connect directly with you, our investors, by sharing updates on performance, highlighting opportunities, and giving you a clear view of where we're headed. Joining me today is Brent Haverkamp, our founder and owner. Brent, let's start with performance and portfolio updates. We recently just completed the refinance of Attivo Waukee. How did that turn out, and what does that mean for our investors?
Yeah, I think it's really good, Jessica, to talk about refinances, particularly in light that we're a long-term real estate owner. And I really think that a lot of people underestimate the power of particularly the tax efficiency of long-term real estate ownership. And so I'm going to give you a couple of examples in our portfolio. 2026 is a really strong refinance year. We're going to refinance 5 properties at Haverkamp Group in 2026. The first we did in April with Attivo Waukee. And just a little bit of development history so kind of people can understand where this fits in the flow. We started construction in 2018 on Attivo Waukee. We brought phase 1 online. And for those of you that don't know, Attivo is our active adult brand that we started building in 2018. And so after about 7 years, it came time for us to refinance that property. And so I just kind of would like to go through the financial results of that. We just, oftentimes when we refinance properties like this, we do it with the agencies, either Freddie Mac or Fannie Mae. And so the one that we completed in April was a $13 million cash out refinance. And so what that $13 million did, along with the distributions that we had along the way, essentially gave our investors back 100% of their investment. And even though they got 100% of their investment back, there's been no tax implications during their 7 years of ownership. So the investor got 100% of their money back, but they haven't paid any tax yet. More importantly, the property is still strong cash flowing. They still have all their ownership in the property. And so that's why we really like to push long-term ownership of real estate at Haverkamp, because you're able to compound these tax incentives for a really long time. If we were like a lot of funds, we would have sold the property by now. And if they were sold the property, they would have received more cash flow, but there would have been a big tax bill at this time. And so our investors will be able to retain that ownership and have the powerful tax advantages of owning the property. The second thing we're doing, we're having 4 refinances of property that is going to come up here at the end of August. And these 4 properties were all properties that we developed mostly between that 2010 and 2015 period. And then in 2016, we put 10-year Freddie and Fannie financing on these properties. And with these 4 properties, the biggest of which is Woodland, which many of our investors are in that property, but we're going to do about a $20 million cash refinance in the aggregate for these properties. Now, on these, it's a little bit different because we're past the period where we no longer pay taxes on these properties. And so typically the distributions on these properties are taxed, but this $20 million of refinance is a tax-free refinance. So when we refinance property and we put more debt on it, the government doesn't charge any taxes. And so the investors in all these properties have long since received all of their investment back, but they're going to receive another $20 million that's tax-free. And so when these things happen, after 7 years of ownership or after 14 years of ownership. I just think it's really helpful to remind our investors how powerful these tax-free refinances are for many of their investments. And I think the people that have been with us a long time really see the power of that, Jessica.
Mm-hmm. Now let's talk about development progress. How is Emory North Liberty Phase 2 coming along, and what are you seeing in terms of the lease up on that property?
Yeah, I think it was just on Monday in our leadership meeting where we were just kind of talking about how well Emory North Liberty was going. And I said, I don't think we've seen a property lease up this strongly since our original Emory project in Altoona. And I don't remember, but that was maybe back in 21, 22. I'm trying to remember when that was, Jessica. But really, Emory North Liberty, for those of you that don't know, it's a 350 unit Class A project that we are building in the northern suburb of Iowa City, North Liberty. And we are having some of the strongest lease up performance that we have seen in years in our property. And I'll kind of walk through that just a little bit, but we had a building that came online on May 1st. And on that building, as of today, we fully expect to be fully rented up on this project by the time this podcast comes out. But as of today, we have 41 out of 44 units leased in that building. Then we're bringing on another building on August 1st, and we have half of the units in that building that's leased, and that building won't come online here for another 3 months. So we fully expect to be fully leased on that building. The rest of the project is running in the high 90s for occupancy. And so the absorption that we've seen in that project has been pretty astounding. A little bit about the rent performance. In our pro forma, we had roughly a bit under $1,700 per unit on an average rent in our pro forma. What our in-place leases are actually over $1,800, and our market rents are trending towards $1,850. So not only are we exceeding our velocity that we have on that project, but our rents are exceeding what we pro forma'd. And so all of our investors in Emory North Liberty are going to be super happy with the investment that they've made in that property. And I started to ask myself the question, why is that? And I really think, Jessica, that that's where our vertical integration comes in. And so both of these projects, our construction team, they were able to deliver them a little bit early and probably more excitingly, under budget. And so because they were able to deliver early and our coordination with our property management team, they were able to really jump on the leasing of that and really achieve some tremendous velocity. Additionally, we're going to be under budget on that property. And so as an investor, I'm super excited about what's happening at Emory North Liberty.
Yeah, those are some huge wins all around.
Big wins. And for a project of that size in a smaller market, you're always concerned about absorption. And on this property, we just really hit it out of the park.
Yeah, it's a gorgeous property too. So I can see why people love it. On the Attivo side, how is Ankeny Phase 3 performing so far?
Yeah, we're going to bring Phase 3 to a completion here at the end of May. And so our construction team has been on that property now for probably 2 or 3 years between Phase 1, Phase 2, and Phase 3. And so we are so excited to bring that property to completion as well. And I think it's good to kind of remind our investors the differences between our active adult communities and contrast that with our conventional properties like Emory North Liberty. And so our active adult, they have pros and cons. And so the pros is once they're stabilized, like our Attivo Waukee property, that our tenants are very, very sticky. And so we have a very high retention rate on our tenants. And so our Attivo Waukee property stays very highly occupied on an ongoing basis. And we have very low turnover at the property, which leads to lower expenses. Is wonderful. But the con is that their properties are slow to stabilize. And so we've been stabilizing at about 5 a month, 5, maybe 6 leases a month. And the last couple months have been very good. We've exceeded that number. Spring is always a good time to rent units. And so it's been fun to kind of exceed our number at Ankeny these last couple of months.
That makes us also really excited about the next fund that we have out, the Attivo Omaha Investor Fund. So what makes this project unique as we expand the Attivo brand into the new market?
Yeah, I think I'd like to talk a little bit more just about our Attivo brand in particular. And as you know, our mission here at Haverkamp is to create communities where people love to live. And I think that is such an apt description as we think about our Attivo brand. And so we're creating a community where people love to live, and it's so important to that community. And I really think we want to lean into that mission, particularly the creation part. And so I'm going to describe our active adult communities. And so active adult is a portion of the seniors market where we have a tenant by choice. And that means our tenant, it's a age-restricted community, so plus 55. Our average resident is in their early 70s, and they are telling us that they want a lifestyle change. They want a lifestyle that doesn't involve home ownership. It doesn't involve maintaining a home. It doesn't involve taking care of the home. But what they're most attracted to is the community. And so I love that idea of creating communities, because not only are we developing and constructing a community, but our property management team, through their lifestyle component, is creating a community where our residents love to live. And they are so attracted to the community that most of them will sell a home and they'll move in and they'll be residents with us potentially for life. And so I love that, both in terms of fulfilling our mission, but I also love it from an investment perspective, because I believe this whole active adult development sequence is really in its early innings. And demographically, particularly in the upper Midwest, we have such a powerful tailwind behind us with, in this country, there's 10,000 baby boomers that are turning 65 every day. And so it's kind of a shocking number. And so we have such strong demographic tailwinds behind us, combined with a strong desire for something different. I really think COVID taught our seniors something. And, at the beginning of COVID, everybody was afraid to be out in community. And so everybody masked up, everybody isolated, particularly our seniors. They isolated inside their homes. But after a couple of years ago, of that, we realized that how unhealthy that was for our communities and how essential community was, particularly for our seniors, and what a dangerous thing loneliness and isolation is. And when you get to go to our communities today and you see the life that is there, the activities that are there, and the joy that our seniors have, it's just so wonderful to see how we can fulfill our mission. And so from an investment thesis, I think it's super powerful. And I think in 10 years, we're going to look back at the investments that we've made in the communities that we've created on the active adult side and be so excited about what we've created. And our goal really is to build a portfolio of these. And as we see more and more investment and more interest as this space proves out, I think it'll be a real powerful investment for our investors. And as you know, we are building a brand new Attivo in Omaha, and we're going to start construction on that very, very shortly. And we're super excited about that. We looked around, Jessica, to find somebody to partner with us. And, we had a group out of California that raised their hand and said, hey, we'd love to be a third of the project. And so they've shown confidence, and they're investing $12 million into the project. We've had very strong interest from our retail investors. And I believe this fund, just like our previous funds, we will fill 100% and we'll oversubscribe on. And I'm just super excited about giving this opportunity to our investors.
Yeah, and they're really, they're building out their own portfolio, but they are also changing lives, so they can feel really great about this investment.
Yep.
So we are just about to break ground very soon and at Omaha. So what does that milestone represent for both the project and for our investors, prospective investors, that we're actually getting to groundbreaking here?
Yeah. So, it represents probably 2 years of work from our perspective, from, finding that perfect piece of ground, to developing the perfect project, to find some of our seed investors, and to actually move forward on breaking ground is super exciting. I've been talking to banks these last few weeks. We got a super aggressive proposal from a regional bank. And so we're going to put financing on this just shortly. And so there's very few things that we get to do that's more fulfilling than to actually start on creating a community where people love to live. And we're excited to see that groundbreaking happening.
So let's move on to insurance and the cost environment here. Insurance has obviously been a major topic over the past couple of years, and we're starting to see some shifts. So what are you seeing in terms of insurance premiums right now?
Yeah, so let's just say May 1st has generally been an unhappy date for us these last few years, because our insurance renews on May 1st, and we've really seen double-digit increases in our insurance these last 3 years. And that's always been a headwind for us and a drag on our NOI. And there's just a lot of things that have come into it from, nationally, we've seen a lot of disasters from wildfires, even in the Midwest, through things like the derecho and some hailstorms have really, increased our insurance premiums beyond what all of us thought were reasonable. Finally, that's going back the other way. So this year, I'm really excited to say we're going to see a 30 to 35% decrease in our insurance premiums across our multifamily portfolio. And so let's just put that into context a little bit. Across our portfolio, our total insurance premium is about $2 million. And we're going to see a $600,000 to $700,000 reduction in our insurance rate. The super exciting thing about that is we usually measure things in NOI. And so, a $600,000 to $700,000 increase in our NOI is over a $10 million increase in our valuations. Now, we do have some headwinds as well combined with those insurance premiums. If our investors have been reading the news here, particularly in Iowa, our legislators have had the goal of some time of how they can reduce property taxes in Iowa. And so we have been, as a property management firm and as a large owner, have been involved with several of our legislators. And there was a really concerning bill that the Iowa Senate passed. And that bill would have raised property taxes for investors in Iowa, as much as 50 to 80%, which would have been pretty catastrophic for us. And so through our lobbyists and through direct contacts, we were able to get that a lot better. But still, it's going to result in increase in property taxes for apartment owners in Iowa. The details of that we're not really sure on. I'm not sure that anybody knows the exact implications of the bill that was passed, but I would guess that's going to be at least a 10% increase in our property taxes going forward. Now, it'll take 3 years for that to be implemented. And the good news is Iowa did put what we call a hard cap on what the municipalities can raise property taxes in the future. That cap is at 2%. And so we're going to see property taxes rise more slowly in the future. And so over time, these will even out, but it will take a while for us to offset the increase in property tax. So we're hopeful that the decrease in insurance rates will be at least as much as the increase in property taxes, but time will tell. And so it's always an interesting time as we think about the real estate market on our portfolio.
Yeah, and I think it's great for our investors to hear directly from you on what's going on in the market and help them make a great investment. So let's zoom out for a moment and talk about the broader market.
Yeah.
So how is the Midwest performing today compared to other regions?
Yeah, I think we're seeing more of the same. We're seeing tremendous investment nationally, particularly in institutional grade apartment complexes here in the Midwest. And so that is both good news and bad news. The good news is valuations are high, liquidity is high. I think we talked a little bit in our last podcast. We decided to sell a couple of properties earlier this year. And so if we do want to sell a property, liquidity is there to do that. You know, on a national level, we saw a lot of markets post-COVID really spike, in the Sun Belt. And we saw a lot of groups in those markets try to make a short-term bet on that, where maybe you were in the Sun Belt and you would buy a property, hope for a quick increase, and then sell that property. A lot of those groups got in trouble because that did not happen. Good thing about the Midwest is we're steady, and we don't go up too fast and we don't go down too fast. And as you know, we've been investing in this market for a long time, but we've been able to have consistent returns and really consistent results. And so I don't really see much changes in that. And as we move along, we've worked really hard on acquisitions, but there's so many dollars coming in that we really haven't had a ton of success on the acquisition markets to pay the kind of return to our investors that we like. But we're starting to get a lot more excited about the development side of the market. Construction costs have remained flat after their strong run-up post-COVID. And, if we can keep the interest rates reasonable and the construction costs reasonable and the liquidity stays strong, we really believe that there's going to be some opportunities on the development side moving forward.
So we have the Attivo Omaha Fund that's open right now. Why don't you give investors a little glimpse of other things that we have coming down the line here as well?
So clearly, the Attivo Omaha Fund is open right now to our investors. I think it will be till midsummer. And I would tell our investors that, hey, we have an opportunity now, but I think that fund is likely going to be filled up. We're continuing to explore other development activities, particularly with the success of our conventional project in Emory North Liberty. We're looking at some land in Ankeny, and we're hoping that will pencil out. We'd love to do another Emory-like fund, Emory-like project in Ankeny, and hope that we can have the same sort of success that we're experiencing in our North Liberty market. And so, we are continuing to look. I think people are going to see a lot of exciting development opportunities going forward.
Mm-hmm. We have a Haverkamp Farms division.
Yes.
And so with that division, we also have another fund that will be coming out as well.
Yeah. I think a lot of our investors know this, Jessica, but it's been about 10 years ago. I was looking for an hedge to our multifamily real estate. I wanted something that had different inputs that would move it. And so we started buying farms in Iowa, probably acquired 60 farms during that time period. And it's accomplished exactly what we wanted to do. And it protected us from inflation, yet it didn't have a lot of the same inputs that we see on the multifamily side. And so we said, if farms has been really valuable to my portfolio, I wonder if it would be valuable to our investors as well. So we've decided to create a farm fund. What we've been doing now for well over 30 years has created a tremendous amount of value. And now we have a couple hundred investors that invest alongside of us, and we want to give them the same opportunities. And so if you think you're interested in that, once that's ready and to go, we'll put that information out there for our investors.
So we've talked about a lot of things here today. What would you say are the key takeaways for investors as they've been listening to your update on the market?
Yeah. I think uncertainty is the word. Most mornings, I wake up and I'll open the Wall Street Journal and I'll read about the tremendous amount of uncertainty that's in the market, be it with the war or multiple wars or whatever it happens to be. And I'm continually impressed at how happy I am that most of my wealth is invested in tangible assets. It's something that I can go take a look at. It's so gratifying. Just yesterday, I got an email from one of our major investors, and it was the Prairie Point investors that we made. They say, "Hey, I drove by my investments, and they're looking great." And there's something about going up to a cash flowing asset that's inflation protected, that's tax advantaged, and being able to see it and touch it and have that tangible asset. And so we're going to continue to do what we've always done. And yeah, it was fun giving this update in an uncertain time. Even with uncertainty, with things like property taxes, that is within our portfolio, how excited I am about the future of what's going on at Haverkamp.
Well, Brent, thank you so much for sharing your insights today. And to our investors, thank you for choosing to invest alongside us. We appreciate your trust and look forward to continuing to build with you. We'll see you next time on Alongside Us, a Haverkamp view on the market.